a company that has rallied more than 40% this year. In fact, this stock has consistently delivered stellar returns, Honeywell Automation. So what's working for this company? Darshan is standing by to tell us. Darshan, we know MNCs have done well, but Honeywell Automation is probably in a league of its own in the last 1 month.
Yeah, so a couple of things worked, and in a situation where you saw how BHEL came out with numbers, how Siemens disappointed yesterday, Honeywell came out with strong set of numbers, and a lot of things that were said in the budget worked in its favor. So a couple of interesting points that you need to watch out for. Obviously, it's up 40% this year, but look at what's happened since December 2020. So in the past 20 years, it's up 200 times. So for a stock which is almost 38,000 rupees, that to move 10% every day for the past few days is indeed stunning. That shows the confidence that it is there. Now, basically what it does is just to give you a big business profile of what the company does. It's basically into automation and control system, caters to oil, mining, metals, power, and the entire smart city grid that they do. That is something that is positive. They have said that they want to get into more pharmaceutical and healthcare industries also in terms of automation. So wherein there is modernization that is happening, Honeywell Automation is one of the companies that is there. Now look at the internals. It has a market cap in excess of 33,000 crores. The promoter holds 75%. Hardly any debt. Cash of almost 1,400 crores on the book. So no problem at all as far as the balance sheet is concerned. Clean international MNC company. Promoter has 75% stake. Now look at the return ratios that the company has been throwing. Very strong, 13% on asset, but on equity and capital more than 20%, which is very, very good for a company, or at least in a company which is into capital goods and has to do a lot of capex. Now look at the financials, what they've thrown up over the past few years. Look at the revenue. The revenues moved in from 650 crores to 900 crores. So consistently they have been performing, and from the first quarter 2018, when they did a 55 crore, they managed to triple their revenues in a matter of 2-3 years. So there is enough traction. So the financials speak for itself. But they've been able to continuously increase their margins and gross margins also, which is also good. Now, if you're looking at the gross margins, again, they had slacked a little bit, but now again back at the 49 mark. But look at the EBITDA margin from a 12% in the first quarter of 2018, they moved to almost 21% currently. So there is a lot of positive things that are happening. First of all, what is aiding the margin? Both on the export front and the domestic front, there is enough positive traction. The export is a high margin growth business for them, and the revenue CAGR for the past 5 years is a 24% CAGR on the export business. So that is doing well. And domestic also, even though the CAGR may be low of 11%, the domestic business managed to turn around in the last 2 years. So that is where a lot of positive traction comes out.
So, Darshan, the history is looking very solid. They have expanded margins, expanded profits. What's the outlook going forward? And can we compare it with some peers? How does it stack up?
So it's managed to do much better than the peers. I think ABB will come out numbers today, so we'll come out to what it does. Siemens yesterday probably disappointed. Let's take a look at some of the things that the management does. It doesn't speak openly, but on the annual reports, they did manage to give some positive cues, and some analysts also reported. So first of all, there is demand for pharma products, for product process automation. That is what they had said. Smart city and digital initiative to aid building solutions. Now, if you look at what happened in the budget, there was a lot of emphasis on smart cities where we connected to Schneider Infra. I think Honeywell is the bigger player here, and it has been doing well consistently. It's already working on 3 smart cities. It's completed, and 7 are already in process. So it's a big player in there. The other things that is there is railway modernization, metros, new airport growth areas with the Udan project that the government has announced. There is a lot of traction there, and industrial Internet of Things adoption is poised to increase, is what they say, and across the board, be it any industry, there is Internet of Things that is happening. So that is something that is working. Now, you asked about the peer comparison. Look at how they've managed to move in the last 1 year. Honeywell Automation, clear outperformer compared to, even though Siemens and ABB have given positive returns, Honeywell Automation has managed to outperform with a 78% return that is there, and majority of the move has come in the last 1.5 months itself. In terms of how they have performed in terms of valuation, and there Honeywell Automation in the December quarter, good revenue grew 11%. ABB results will be out today, but we took the last available number. That was the September quarter, where they fell in 30% with margins of 7%. Siemens yesterday saw revenue decline of 5%. The management commentary was not there. Even though ABB and Siemens are cheaper compared to automation, but look at the margin difference that ABB or Honeywell has compared to the others. In terms of valuation, no doubt it's expensive. On an FY20, it's 70 times. On an FY21, it's 60 times. So not too much brokerage coverage on it, but the Bloomberg consensus does indicate that even after at the 38,000 rupee price, there is still a potential upside of 5%.
It's very interesting, Darshan, that in the same space, Honeywell Automation, both on the return ratios as well as the EBITDA margins, is able to do much better than its peers. Surely they're doing something right or something which is slightly different than its peers.
Yeah, so basically they got a lot of emphasis from the recent push on infrastructure, at least on the smart city, because they've done 3 cities, 7 are on the way. There is a lot of emphasis on automation. While you know, it's not a direct apple-to-apple comparison, because ABB also is into, you know, power equipment where Honeywell is not. Siemens also has that thing in that, but nevertheless we're comparing multinational to multinational, which also have a component of in the digitization in terms of automation. That's this, and I think the majority they've been doing well for the past few quarters, and they've been consistent performers. That's why probably the 200 times move over the last 20 years, but the majority of the move came in the last 2 or 3 years.
Got it. Darshan, thanks so much for putting that into perspective.